Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Good to have you back on.
Happy to be here.
Well, last Friday, stocks on Wall Street saw quite a big decline. The Dow off by 500 points, the Nasdaq by 0.9%. It seems like a while since they've had this kind of volatility. What's the story in the global markets?
Okay, well, they're attributing the large decline on Friday to three reasons. Two of them are rather technical, and one has to do with the FOMC meeting. The first technical reason is that last Friday was so-called quadruple witching day, which occurs on the third Friday of the month of every last month of every quarter. So that would be in March, June, September, and December. And why do they call it a quadruple witching day? It's because it's the day that the single stock options, single stock futures, stock index options, and stock futures options expire. So on those days, stocks do tend to do very badly, and that's partially the reason why it did so badly on Friday. The second reason is that when we have these type of end of option days, these witching days, they have rebalancing of some of the indices. So S&P as well as FTSE rebalance some of their indices, which seem to have affected some of the numbers. But the biggest reason that the analysts attribute is the FOMC meeting that they actually had on Wednesday afternoon, when the dot charts average showed that the Fed is likely to increase rates twice by 2023. And then St. Louis Fed President Jim Bullard said that interest rate may rise as quickly as late 2022. Now, the analysts are attributing the major reason for the stock price fall to the potential interest rate decline in the potential interest rate increase in the future. I'm not as convinced because this news was available from Wednesday, so it should have affected the market more on Thursday rather than Friday, but still, it does seem to be making the market a bit more nervous than it was. The European markets followed the U.S. markets down on Friday. FTSE, CAC, and DAX all fell similarly to Dow and the S&P. Asian markets have somewhat slightly differing trends. Nikkei followed the U.S. markets. It has been declining since Tuesday. Hang Seng, it rose from Wednesday to Friday last week, but it fell today. And Shanghai is holding roughly level since Tuesday.
And today, Korean shares down pretty significantly as well. The KOSPI about 0.8%, the KOSDAQ 0.5%. Is that the same kind of trade we saw in the U.S., or tell us what's happening here in Korea?
Okay, well, the interest rate news from the Fed is affecting the stocks all over the world, but I think Korea has one or two more reasons why it has been falling since when KOSPI has been falling since Wednesday. First of all, last Monday and Tuesday, we had record highs over 3,200. Even now, it ended today at 3,240.79, so it's over the 3,200 level. And because it had historically high closing numbers early last week, I think it's acting as burden on the KOSPI index. We know that the Korean firms are doing better, but perhaps not historically better. And Bank of Korea, as well as the Fed, is indicating that they will start reducing liquidity in the market, which means that stock markets are likely to fall. So they may be preparing for that likelihood. KOSDAQ, it ended today at 1,010.99, so it ended again at above the 1,000 level, though it fell slightly by 0.48% today. For both KOSPI and KOSDAQ, individual spot, institutions and foreigners sold, but individuals bought an incredible amount in the KOSPI index. The individuals bought nearly 2 trillion won's worth of stocks today.
Wow, and news shows we also saw an increase in Korea's exports again this month. In the first 20 days of June, up almost 40%. That's across semiconductors, cars, petrochemicals, chips in particular, up almost 29%. What's behind the continued rise in exports, and where do you see it going?
Okay, well, we should be careful in using the numbers when we're comparing it to last year because the exports from March to August last year fell due to the coronavirus. So even if we had mediocre numbers, it'll look good compared to last year's numbers. But still, it was actually fairly good numbers, even taking that into account. Exports for first 20 days of this month was 31.1 billion. And that's higher than last year. It's higher than 2019. It's higher than 2018, though it's slightly lower than it was in 2017. So it's not as historically high as it was in March, April, and May. But still, 2017 was a fairly good year for Korean exports. So it's almost up to that level. So Korean exports seem to be doing well, though it's no longer doing as historically well as it did in the last few months. Semiconductors went up by 28.5%. Automobiles went up by incredible 62.2%. But computer peripherals fell by 4.2%. It may indicate that the increased sales that we saw, increased export we saw for computers and computer-related equipment because of the coronavirus is ending, because in the Europe and the United States, the distancing is beginning to end. But where the interesting news really is, I think it's imports. Imports was $32.1 billion in the first 20 days of this month, and it's partially due to the global recovery. So we saw increase in imports of automobiles and semiconductors, but also because of rise in oil prices. Oil imports value-wise rose by 124.6%, and petroleum product imports rose by 99.1%, which indicates we had an incredibly low oil prices last year, but now we have slightly higher than average oil prices this year compared to typical years.
And finally, Professor, before we go, this week the Bank of Korea will have its producer price index for May, also data on household and corporate debt. What's on your radar as we start the week?
Okay, well, the most interesting report is going to be that debt report, the financial stability report that's coming out on Tuesday. Korea is experiencing rapid rise in not only household debt, but also corporate debt. So that'll give us an idea on whether the BOK may raise the interest rate this year rather than next year. Globally, U.S. new housing sales and U.S. personal expenditure figures are due out next week. That will show how solid the global recovery is. But I think the most interesting thing is going to be speeches by various Fed FOMC members to give an indication when the global interest rates may start to rise.
All right, Professor, we'll have to leave it there for today. Thanks so much, as always, for sharing your insights. We appreciate it.
Thank you.